orthodoxy. Welcome to the Money System, where we explain how money really works.
Did you know that in the next few years, the shipping container you're waiting for might never arrive? Not because it's lost at sea, but because the ship carrying it was deliberately destroyed. And this isn't some conspiracy theory. It's happening right now on a massive scale. Billions of dollars worth of perfectly good ships are being sent to their graves. But why? Why would anyone intentionally destroy these colossal, expensive vessels? Stick with me, because the answer reveals a shocking truth about the global economy, and it affects everything you buy. Let's rewind a bit. For decades, the world has relied on a simple formula: build more ships, ship more goods, and watch the global economy grow. Companies like Maersk, Costco, and MSC poured billions into constructing gigantic container ships, each one bigger and more efficient than the last. These behemoths, some stretching longer than the Eiffel Tower is tall, became the undisputed kings of the ocean, carrying everything from your smartphone to the clothes on your back. The industry was booming, freight rates were stable, and it seemed like the party would never end. Then 2020 happened. The pandemic hit, and the world shut down. Factories closed, ports became congested, and suddenly there was a massive shortage of shipping capacity. We all remember the headlines. Supply chains were broken, store shelves were empty, and the cost to ship a single container skyrocketed. It went from a few $1,000s to over $20,000 almost overnight. For the shipping companies, this was a golden era. They were making record profits, more money than they had ever dreamed of. It was a classic case of low supply and high demand. So, what did they do? They did what any business would do in that situation. They ordered more ships. A lot more ships. In fact, they ordered so many new ships that the global order book swelled to nearly 30% of the existing fleet's capacity. We're talking about hundreds of brand new state-of-the-art vessels, all set to hit the water between 2023 and 2025. On paper, it seemed like a smart move. Prepare for future demand, right? Well, here's where the plot thickens. The world started to reopen, production ramped back up, and supply chains began to untangle. That insane demand for shipping started to cool off. But those hundreds of new ships, they were still being built. They were still on their way. Suddenly, the shipping industry was staring down the barrel of a huge problem: a massive oversupply of ships. Imagine you're a baker, and one day everyone wants your bread, so you build a giant new oven. But by the time the oven is ready, everyone's decided to go on a low-carb diet. That's essentially what happened to the shipping industry. They had a tsunami of new capacity about to flood a market where demand was drying up. This is where basic economics kicks in. When supply massively outstrips demand, prices crash. The cost to ship a container, which had peaked at over $20,000, plummeted back down to pre-pandemic levels, and even lower in some cases. The golden era was officially over. Shipping giants went from reporting record profits to facing a potential bloodbath. Their multi-billion-dollar assets, these massive ships were suddenly at risk of becoming liabilities. An idle ship doesn't just sit there for free. It costs a fortune in crew, maintenance, and port fees. So they were faced with a choice. Let all these new ships enter the market, cause a massive price war, and potentially drive many companies into bankruptcy, or find a way to reduce the supply. And that brings us to the shocking solution they're turning to: ship breaking. It sounds brutal, and it is. Ship breaking, or ship demolition, is the process of intentionally beaching a vessel and tearing it apart for scrap metal. These colossal ships, which cost hundreds of millions of dollars to build, are run aground on beaches in countries like Bangladesh, India, and Pakistan. Then armies of workers, often with minimal safety equipment, descend on the metallic carcasses. They use blowtorches and sheer manpower to slice the ship into manageable pieces. It's a dangerous, dirty, and environmentally hazardous business. But for the shipping companies, it's a calculated financial decision. Here's the cold, hard logic. By scrapping older, less efficient ships, they can remove capacity from the market. It's a form of artificial scarcity. Fewer ships mean the remaining ones are more likely to be full. This helps to stabilize or even increase freight rates. It's better to get a few $1 million for the scrap metal from an old ship than to have it sitting idle, costing you money while it also drives down the price for your entire fleet. They are essentially sacrificing the old to save the new. Think of it like this: if you have 10 ships, but only enough cargo for 7, those 3 extra ships are a problem. They create competition and lower the price for everyone. But if you scrap those 3 ships, suddenly your remaining 7 are in high demand and you can charge more. It's a ruthless but effective strategy to manage the market. And the scale of this is staggering. Industry analysts predict that a significant percentage of the global fleet could be sent to the scrapyard in the coming years. We're talking about billions and billions of dollars in assets deliberately destroyed to rebalance the market. For example, a 15-year-old container ship that might have been worth $60 million a couple of years ago might now only fetch $10 million as scrap. But for the owner, that's better than nothing, and it helps protect the value of their newer, more expensive ships. So, who are the winners and losers here? The big shipping companies, if their strategy works, will stabilize their profits and weather the storm of overcapacity. The shipyards building the new vessels are certainly winning as they work through their massive order books. The shipbreaking yards are also seeing a boom in business. The losers? Well, potentially all of us. This manipulation of supply means that shipping costs might not fall as much as they naturally would have. That cost gets passed down the line from the manufacturer to the retailer, and finally to you, the consumer. The cheap and abundant global shipping we've taken for granted might be a thing of the past, not because of a genuine shortage, but because of a deliberately engineered one. And we can't ignore the environmental and human cost. Ship breaking is one of the world's most dangerous jobs. The beaches where this happens become toxic wastelands, polluted with asbestos, heavy metals, and oil. The workers face incredible risks for very little pay. So, while it's a neat financial solution on a spreadsheet in a corporate headquarters, the reality on the ground is far grimmer. What we're witnessing is a dramatic and brutal course correction in the global shipping industry. The pandemic created a bubble, and now that the bubble has popped, companies are scrambling to control the fallout. By destroying billions of dollars worth of ships, they hope to create a new, more profitable equilibrium. It's a high-stakes game of economic survival played out on the world's oceans and on the shores of South Asia. The next time you see a container ship gliding across the horizon, remember the hidden story. It's a story of boom and bust, of incredible wealth and desperate measures, and it's a story that proves that in the world of global logistics, even a multi-million-dollar giant can be worth more dead than alive. The fate of these steel titans is a powerful reminder of the invisible forces that shape our world and the price of everything we buy. Thanks for watching. This is a complex topic with huge implications for everyone. What do you think about this strategy? Is it smart business or a reckless waste? Let me know your thoughts in the comments below, and if you found this video insightful, please hit that like button and subscribe for more deep dives into the hidden mechanics of our world. See you next time.
So, we're not smart. If this helped you understand the system, subscribe, like, and share this video.